My name's Richard Berry. I'm the founder of Good Money Guide. I'm also an ex-stockbroker and ex-derivatives broker. Today we're going to have a look at Trading Places. It's one of my favourite films. My dog is in fact named after one of the key characters, Winthorpe. It's the film that got me into financial services in the first place. I was lucky enough to work on the NYMEX oil trading floor in New York and also the Brent oil trading floor in London. So we're going to watch some of the key scenes in Trading Places and just evaluate how realistic they actually are.
Keep the change. Think big. Think positive. Never show any sign of weakness. Always go for the throat. Buy low, sell high. Fear, that's the other guy's problem. Nothing you have ever experienced can prepare you for the unbridled carnage you're about to witness. Right. Super Bowl, a World Series, they don't know what pressure is. In this building, it's either kill or be killed. Right. You make no friends in the pits and you take no prisoners. 1 minute, you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
Yeah, we gotta kill him, motherfucker! We gotta kill him!
It's pretty much accurate. It's quite sad actually watching that. I was stood probably about a street back. I was just coming out from Fulton Street tube or subway when the towers came down. I was working on the NYMEX oil trading floor, so it's quite sad seeing that. But before the NYMEX trading floor moved to the World Financial Centre, they were in it was in the Twin Towers. I used to walk under it on the way to work. But it really is like how they described it. It is absolute carnage in there. Well, it looks like carnage. And the risks that people are taking and the money at stake is absolutely immense. I mean, it looks, you'll see it in a minute, it looks utter chaos, but actually it's very well choreographed, very well managed. But yeah, no, it is really that cutthroat. It is really that risky.
We want you to buy as much OJ as you can the instant trading starts.
Don't worry if the price starts going up, just keep buying.
But gentlemen, they're going to broadcast a crop report in an hour. What if they're...
Let us worry about that, Wilson.
Yes, sir.
Okay, so this is quite a pivotal moment because what they're doing here is letting their broker, who will be down in the pit buying and selling orange juice contracts for them on their behalf, know that they've got a little bit of inside information and they know that the price of orange juice is going to go up. So what they're getting him to do is buy as many orange juice futures contracts as possible. In fact, this is the premise of the whole film. It's the stolen crop report, which is the report that will show whether or not the orange juice harvest is going to be good or bad. Now, obviously, if the orange juice harvest is bad, it means that supply will be lower and the price will go higher. But if the orange juice crop report is good, it means there's plenty of supply, not that much demand, so the price will come down. And they know, or rather they think they know, because they don't know that Winthorpe and Valentine have switched it over, is that the crop report is going to be bad, so the price will go up. So they basically, this is the beginning of their undoing here.
Hasn't bothered me in months.
Let's kick some ass.
Okay, so there isn't really a sort of pre-market bell there. I mean, traders, to be fair, do spend a lot of time in the loo, but generally they know where they need to be. So particularly on a day like this, where there's a major economic announcement for orange juice trading, they will be hanging around the pit and they'll be ready to go. One rather thing that isn't quite accurate here is, did you see the badges they've got? Val and Win, they're basically their mnemonics. So when you trade against somebody else in the pit, you do, bought X amount of X month of whatever from Win or Val. So that's how, when you chuck your card into the pit, the clerks can identify who's trading against who. You can't actually just walk into the you can't actually just walk into the trading floor and put a badge on and start trading. I think membership back then, I'm sure it was about $1 million for a membership to trade on the exchange. They're quite sought after. So that's not. I mean, you can't just walk in. I mean, security is pretty tight on these exchanges. So the first time I walked on to the trading floor in New York, it was exactly like this. It was the middle of the day. I'd been up to the offices to see the guys who were trading on the screens, and then they walked me down there. And I remember walking along a corridor like that, and then into this room, and it was just absolute chaos. This is a really good scene, and it's exactly what it's like on the trading floor. Absolute carnage.
Well, this is it. The last bastion of pure capitalism left on Earth. Here in New York, they trade everything. Gold, silver, platinum, heating oil, propane, cocoa and sugar, and of course, frozen concentrated orange juice. Now, the people on the phones are taking orders from brokerage houses all over the world. The runners then hand those orders to the traders in the pits. They're trading cotton over there. That's the silver pit.
So this is a good example, actually, of what I was talking about earlier with the mnemonics, the Win and Val. So all of these guys, they're trading against each other. It's all done via hand signals, and all these people know each other quite well, incidentally. So they all pretty much understand what they're doing. But when you do a deal, you write down the terms of the deal plus the mnemonic, and then chuck it into the center, and then the clerks put it up on the screen, and then that's marked down as a trade. In real life, though, each firm has their own coloured jackets. When I was on the NYMEX floor, we had a blue jacket with red piping and a big M on the back, so you could always tell who's working from what firms. The guys in red, they're local, so they'd be sort of trading on trading on their own book, speculating with their own money rather than as a broker for filling other people's orders.
Now, the Duke's trader is going to be buying like crazy right from the opening.
We wait until he drives the price up.
Right. I can't wait to see his face when they broadcast that genuine crop report.
So the voiceover there is Louis and Winthorpe Winthorpe and Valentine discussing their strategy. Now, what they're going to do is they're going to short the market, because they know that the real crop report is fine. There's no issue with the price of gold. So the Dukes are going to be buying orange juice. So the Duke's going to be buying orange juice all the way up, and then when the price reaches what they think is going to be the high, they're going to sell into it and make their money going short, which of course is what you can do in the futures market. You can profit when the market goes up and down.
OJ trading opens at 9.
Let's go kick some butt.
Let's go.
It really is like this before the market opens. You're not allowed to deal before the market opens, so it's silent. It's so eerie. There's sort of hundreds, thousands of people on a trading floor, all standing in a little circle, all ready to trade. They've already got their buy and sell orders, so they already know what they want to buy and what they want to sell. They've already got their prices in mind, so everybody's completely silent until the bell goes, and then it's just order, order, order. The current price of orange juice is 102, so he set the price, so he's bidding 102 for 100 April orange juice contracts. So that's the price of orange juice at the moment. It's 102. He set the price because he was the first one, first trader to get a deal done. So you can see when they deal, the cards go in, clerks check the trades, they timestamp it like you just saw, and then you can see the trades that have been done up on the wall. So here you've got 102, which was the Duke's opening trade, and then you can see it's gradually ticking up 103, 105, 108 because the Dukes are buying. In reality, I don't really think the orange juice pit was this busy. Like the oil pits were really busy, but some of the commodities they weren't really that busy. But still, it's a good view of what a trading pit would be like. And also, you've got April, May, June, and what that means is that you're buying orange juice to be delivered in April, or you're buying orange juice to be delivered in May. You're buying orange juice to be delivered in June. It's done in monthly contracts. So and April, of course, is the front month. So it's probably February when they're filming this. Yeah. So you can see that they've cottoned on to what's going on here. You can see, everybody's got their eye on the ball. Everybody has got their eye on what's going on, and they can see. Like, obviously, it's not often you get the owner of a firm in the gallery watching your trader trade. So they've put two and two together and seen the Dukes are here, the crop reports coming out, and the price is being driven up. So they've figured out what's going on, which is only going to push the price higher as they figure out that the Dukes are trying to corner the market. So everybody's trying to get in on the action because they think the Dukes have got insider information.
Hey, the Dukes are trying to corner the market.
They know something. I can feel it.
Let's get in on it.
200, take them.
He's just bought another 200 at 132, so the price is going up. So actually, to be fair, he's making money on the contracts he bought earlier at 102. So it's going so far so good for him.
200. Not yet. Almost. 220, take them. 209. Yeah, got him.
The price is really, really ticking up there, up to 142.
Now. Sell going in April at 142.
So basically, everybody thinks that the market's going up, and Winthorpe's just gone in there and offered 200 April contracts at 142, which is significantly higher than where the market opened. So everybody, thinking the market's going up, scrambling to buy his offer. I think in reality here, the price wouldn't really be going down, just because I think if everybody's buying and there's one seller, the price won't go down. The markets work basis there's more buyers and sellers. If there's more people wanting to buy, the price will go up. If there's more people wanting to sell, the price will go down. You just have to look at anything. The market is massively sentiment driven. Even on the stock market, there are so many overvalued companies that are overvalued and keep on going up because people just like them and just want to buy them. So sentiment is a huge driver of the market. In this instance, a couple of sellers, not really going to push the market down, but for the purposes of dramatic license, I think it works quite well.
That's not right. How can the price be going down?
Something's wrong. Where's Wilson?
What are they doing here?
They're selling, Mortimer.
Well, that's ridiculous. Unless that crop report...
God help us.
I told you we shouldn't have committed everything, you asshole!
I've got to get Wilson and tell him to sell.
There you go. The price is coming back down to 114 there. So they sold at 142, and the price is dropping to 114, and the Dukes have been buying even higher than that.
Secretary of Agriculture.
So this is the crop report. This is the announcement. So there's economic announcements all of the time, whether it's to do with indices, commodities, bonds, or stocks. You've got things like non-farm payroll that really do move the market. There are these key economic data points that give you a really good indication on market health, and they're a big driver of where price goes. The markets move massively around them. So a lot of like algo traders just turn their algos off during market economic announcements because they they just send them into a TIS. They send them into a TISWAS. But there's always indications and there's always forecasts that you can see. And if you think the forecasters are wrong, and generally if there is a forecast, it will be priced into the market. But if you think the forecast is wrong, it's a really good way to day trade because you're not betting against the market. You're betting against forecasting and figures. And actually, incidentally, on that, if you want the best economic calendars, we've got a page on the Good Money Guide where we've ranked some really good economic calendars, and they don't just tell you what economic figures are coming out. It will tell you what has happened to specific markets after they've come out. So, for example, on non-farms again. If a price has spiked or dropped, there are some really good economic calendars that will tell you, well, if it's spiked traditionally 5% in the past, within an hour, it's back up to maybe dropping 1%. There's a lot of knee-jerk reactions when economic figures are announced. But these are the ones we're talking about. This is the crop report, which is going to tell us whether or not there is a good supply of oranges or a bad supply of oranges.
Ladies and gentlemen, the orange crop estimates for the next year.
It does all go quiet as well, when there's something like this. It's like the Open, people, there's no point trading before, There's a couple of people that put a sort of cheeky bid or a cheeky offer in, but, generally people want to keep their powder dry and trade after the announcement.
After calculating the estimates from various orange-producing states, we have concluded the following. The cold winter has apparently not affected the orange harvest.
They're long and wrong. So there's no problem with the orange juice supply. The Dukes were betting that there was going to be a massive shortage of oranges, so the price would go higher. But there's not, of course. So the price is the price is going to drop. You can see there. It is actually like that. All the paper and all the dealing pads, it's just an absolute mess on the trading floor. There's just cards everywhere. I mean, it's amazing all the trades got booked, but the system did actually work well. Selling into it, cheap deal getting time stamped there.
Wilson, for Christ's sake, sell!
Below the Open, so the Dukes have been just lost money on every single trade they've put in today. Buy them. So Lewis and Winthorpe. Winthorpe and Valentine have been short, so they've sold at 142, and they're going to buy back at 46. So they've essentially made 100 points day trading. They've obviously been selling all the way down, and they're buying at the bottom because they've pretty much figured that it's bottom. It's just like any economic figure that the price will spike down, and then people sort of buy back their positions to become flat at the end of the day. It's it's just day trading. high stress job actually. There are a lot of traders. We were joking earlier, about the guy, sipping a whiskey bottle and having hypertension. These guys are incredibly, incredibly stressed, and it's a huge amount of hard work. So anyone who's worked on a floor and done this, like, massive, massive respect.
Wilson, where are you going? You idiot! Get back in there at once and sell!
I think in reality, the Dukes would probably have more than one trader in the pit. They're quite a big firm. They say later on that they helped found this exchange. So I think it's highly unlikely that they would just have one trader in the pit. They would be able to get a message to them. They'd have brokers on the phone taking customer orders. I think there'd be a few more people involved. When we were in the oil pit, I think there were 4 or 5 man brokers that were in the pit. So this is a little bit unrealistic. They are heartless bastards, but it's a bit unrealistic. They'd have more than 2 brokers, more than one broker trading at the pit. As I was saying earlier, you can't just grab a card and run into the pit. It's not petticoat market. You can't just run in there. You need a mnemonic, and no one would do a deal with these guys in the pit. Okay, so last trade 29. So opened at 102, high of 140. So the Dukes are buying at 102, went up to 142, and then it's gone all the way back down to 29. In reality, you have what's called market up and market down limits. So the market, to reduce volatility and people losing too much money, essentially, you have market up and market down limits. So if the market was to spike, it's gone up to 142 and then it's gone down to 129. I think in reality that would be outside normal market limits. So what there would be a market pause just for everybody to relax a little bit, and then the time varies depending on the contract, the movements and so on. But essentially, if there's too much volatility in the market, it's suspended until everyone can just, chill out and behave properly.
5? 100? 100? 100?
Happy New Year!
Winthrop.
Valentine.
Hey, how'd y'all make out today?
What did he say? He said the crop report comes out on the 2nd earlier, didn't he? So this is the 2nd. I said they might be trading in February, but yeah, it's trading January for April contracts. Yeah, that's probably about right.
Do this to us after everything we've done for you.
Oh, see, I made Lewis a bet here. Lewis bet me that we couldn't both get rich and put y'all in the poorhouse at the same time. He didn't think we could do it. I won.
I lost. $1.
Thank you, Lewis.
After you.
Certainly.
So there's still quite a lot of activity in the background. So basically what happens with commodities is you have different opening times for various pits. That's so that people can move around. So you don't just have a short trading time and then everybody goes home. There's activity all day. It's very much bankers' hours though. I think they open relatively late and then they close relatively early, so it's still quite a condensed trading day. Obviously, this was before the internet, so you couldn't trade online, but it was still very much bankers' hours. But they'd move around a bit so that people could trade in different pits.
Certainly.
Margin call, gentlemen. Oh, you can't expect us to...
You know the rules of the exchange, Mr. Duke. All accounts to be settled at the end of the day's trading, without exception.
You know perfectly well we don't have $394 million in cash.
I'm sorry, boys.
So this is pretty accurate. If you're trading on exchange as a broker, you do have to settle your account at the end of the day, and that's completely non-negotiable. This is actually one of the reasons why the firm I used to work for, Man Financial, went under, because it used to be a big broker that just traded client orders. But then we had a new CEO come in, started trading on the firm's own book, and essentially they had a big margin call and used customer funds to cover the firm's position. It was absolutely appalling. There's a great book about it called The Money Noose that's available on Amazon. You should definitely read The Money Noose. It's about the demise of MF Global, which was previously Man Financial, which was originally founded by James Mann. Actually, it's one of the oldest commodities brokers in the world. They used to import sugar. It's a very, very sad story, but unfortunately, if you are trading, you do need to cover your profits and losses and margin calls at the end of the day, without question.
Put the Duke Brothers seats on the exchange up for sale at once. Seize all assets of Duke and Duke Commodities brokers, as well as all personal holdings of Randolph and Mortimer Duke.
I'm not sure the exchange could just take all their personal stuff. In fact, if I did write about this years and years ago on the Huffington Post, I wrote this quite in-depth analysis of exactly what's happened here. You know, the value of the contracts, the amount they've lost, the margin that they would have had to put down. So if you are interested in finding out in depth what happened here, just Google why the Dukes went bust at the end of Trading Places Good Money Guide, and that will give you a breakdown of exactly what's happened. But essentially, they lost a load of money and they can't afford to pay their bill, and now they're bust.
We're on.
This is an outrage. I demand an investigation. You can't sell our seats. A Duke has been sitting on this exchange since it was founded. We founded this exchange. It's ours. It belongs to us.
Mortimer, your brother's not well. We better call an ambulance.
Fuck him. Now you listen to me. I want trading reopened right now. Get those brokers back in here. Turn those machines back on. Turn those machines back on.
I love that. Turn those machines back on. So it's so funny actually. When I was a broker, obviously we used to work on this massive trading floor. You know, big banks of screens, hundreds of people in there. But we'd work UK and US shifts as well. So we'd either work 7 to 5 or noon till about 9:30, and obviously we, predominantly doing UK and European markets. So when I was working the late shifts, there'd maybe 3 or 4 other guys on this massive trading floor with hundreds of banks of screens, and I changed the music on the computer so that when you turned it off, it came up with that. So at the end of the evening, when we turned off our computers, the noise that came out was "Turn those machines back on, turn those machines back on." Incidentally, actually, the music that I put on for when you turn your computer on, when you open Windows, it goes ding dong ding. I changed that to the music from Groundhog Day. So that was quite funny. Every morning was the same, but every day was different. It's fantastic. It's such a shame. I mean, it's not such a shame. Obviously, the world is so much more efficient now that you can do all this sort of stuff online. But back when you were taking orders from customers on the phone, it was a really fun place to work.
You and your Nobel Prize, you idiot!
Where's Beeks? Where in the hell is Beeks?
Beeks.
Yeah, I forgot all about that guy.
Great. I think that's it for the critiquing of this. But what a great movie. I mean, to be fair, it's not aged that well, but I love watching these finance movies. They're really atmospheric. They do give a good overview of what it's like to work and have worked in finance. For the most part, they're fairly accurate, but obviously, you have to take some dramatic license when making movies to make it interesting and atmospheric. If you've enjoyed it, drop us a comment below on what you thought about the movie. Tell us whether you liked it, hated it, what you thought was right or wrong about it. If you worked on the floor, drop your mnemonic down below. Tell us some stories about working on the floor, and hopefully we'll be back with another film. In fact, if there's another film you want us to critique, drop that in the comments below, and we'll take a look. Thanks for watching.